The crypto market has started to pull back ever so slightly. Is this going to be much lower prices, or is it just simply a dip before the next leg up? We'll find out in a couple of minutes. We're going to go through a whole bunch of data. I'll outline the reason why this may be happening. And without further ado, let's just get straight into the show. And first and foremost, one thing that came out which could be influencing the markets is Mt. Gox. So early repayments will start from March the 10th with a deadline to be paid out by September the 30th. The payment will be made in a mixture of both crypto and cash, and it will add more selling pressure to the market, which will eventually lead to more volatility. So this is one of the narratives that's kind of going on at the moment. This in combination with the Shanghai upgrade, which leads to a massive ETH unlock, basically suggests that there's going to be a huge amount of selling pressure. Let me know in the comments, do you think that this is going to affect the markets, or do you think it's just fun? Also, give this video a like, hit the bell notification, and subscribe if you're not already. So here you have it. The ETH Shanghai upgrade could add selling pressure as staked ETH is going to be freed up in March. But if you dig a little bit deeper in that, it may not actually be a bad thing. And the reason why is because over $27 billion in ETH is going to be unlocked. But that means that it's actually going to be a gold rush potentially for LSDs because they don't really have much of a market share. And that means that that previous ETH that was staked, where they weren't really getting any airdrops or rewards for that, now have the opportunity to claim airdrops from LSD protocols. So if you look at this from 𝗬𝗍𝗍𝗍 over here, or Louis Cooper, I should say, I'll retweet it. Go through to my Twitter. Feel free to go through the thread. It's quite a long one, but he outlines a whole bunch of LSD protocols that could be worthwhile watching. So if you are looking for a trade idea, here it is. This is a trade idea for you. I've marked out in my own LSD portfolio over here a whole bunch of coins. So I have a couple of extra ones above and beyond what he's listed. Feel free to take a screenshot of this. These are the coins. Here you have 𝗨𝗏𝗍𝗍𝗍, Rocket Pool, Yearn Finance, Anchor Network, Aura Finance. You have StarFi, StakeWise, Starter, Pendle, Bitfrost Native Coin, Horde, 𝗕𝗬𝗆𝗍, and liquid staking derivatives. So I think that this could be something that might catch a bid, especially if the market doesn't nuke. As long as the market can continue to hold at least sideways to potentially slightly up, I think that this will be the next narrative. This is going to be the next one that's gonna run. So you probably want to have just a little bit of exposure. You don't necessarily need to buy every single one. For the sake of time, I'm not going to go through all of them, but what I would suggest is go and have a look at the ones that are in an uptrend, at least on the 4-hour chart. If you find any of them that are in an uptrend on the 4-hour chart, those are probably the ones that you can go for, right? Because trends tend to continue for longer until such time as obviously you break the structure and then the trend ends, which means you want to buy ones that have strength, especially if they have strength now. It means when the narrative really starts to pick up, those ones could potentially explode. So that's what we're looking at over there. Let's move on over here. King G over here sums it up very, very nicely, and I tend to agree with this to an extent. He says, yeah, for the past 30 days, we've had every thinkable bad headline in the book come up on a daily basis. Stablecoin legality, Binance fraud, US exchange staking ban, Voyager liquidations, ETH Shanghai withdrawals coming, Mt. Gox releasing, and yet price is still above 23K. So it is bullish if you can hold above 23K. But if you start to fall below those levels and you start to take out the previous higher lows and you break structure, of course, then things can start to change very, very quickly. And maybe this would all just be delayed and take an effect later on within the market. So something to keep an eye out on. But if you're holding above that, I agree, it's pretty bullish, right? You know what they say, when good news, when the market continues to sell off in good news, you know it's a bear market. And when the market continues to grind up with bad news, then you know that it's a bull market. So if the bad news persists and price continues to hold up and grind upwards, that should be something that you should really pay attention to, because it is a sign of strength. And Andrew Kang suggests over here that sometime between March and May, you're going to have a confluence of that Shanghai fear dumping narrative. You're going to have the equities reaching local bottoms, And then you're going to have the market being less optimistic about a soft landing or rate cuts. That's already taking place now, by the way. And then you're going to have people shorting at the bottom. He said at that point, if Ether is around 14 to 1500, it will be a comfy max long. And I would agree. Look, if crypto does hold up, so if all of these things come into fruition and you see the stock market and equities making new lows or a local bottom, retesting those local bottoms, and Bitcoin manages to hold at least above the mid-range, or at the worst case scenario, it holds above the range low, there's a small diagonal that you can run across that meets up with the horizontal. That takes price to around $18,000 for Bitcoin. If those levels don't get breached during all of this peak fear and FUD scenario, well, I can't call it FUD, it is legitimate. So during this peak fear scenario, then that would be an opportunity. That could really be an opportunity to build into your long-term positions. But with the monthly chart over here, you can see how price has been fighting with this monthly 50 MA. Yesterday, at least, we wicked directly into that moving average once again, the 50 moving average, and then consequently prices pulled back down and rejected from that zone. So a lot of indecision, which we knew, because you can see from the previous candle, that is a doji indecision candle right over there, showing you that both bulls and bears are unsure of where the market is actually going to go. So all you can do is zoom in, look on a low time frame, at the very least a 4-hour chart, and then make your decisions from there. I would say as long as the 4-hour chart is maintaining its uptrend, then you probably want to have long exposure, because there is a possibility that the next big move is going to expand to the upside. If that 4-hour trend starts to break down and enter into a 4-hour downtrend, so lower lows and lower highs, then you probably want to start to bail out of your positions very quickly, because this can very quickly turn back over to the downside, and then you can get lower prices. But looking at things from a historical standpoint, I thought, let's take a look over here at the Gaussian channel, but we're going to look at it on the weekly chart, and I'm going to throw in a couple of other indicators. One being the Lucid SAR, which you know we've looked at quite a lot. We look at a break of the Lucid SAR as an area where we should start to pay attention. And then after that, we look for the golden cross between the 50 and the, between the, the 9 and the 18 EMA, which lines up with, on the daily chart, it would be the 50 and 200 EMA. So on the weekly chart, 9 and 18 MA or EMA, and then on the daily chart, it's going to be the 50, 200 MA that matches up in a similar fashion. So going into 2015, what happened? Obviously, you're right, you came off following a massive sell-off, and these fractals do look relatively similar. You broke this Lucid SAR, so in the same way that you had, take a look at there is a scary similarity in this chart, right? This would be similar to what we saw when Bitcoin was at 48K. So just think of this as the 69K top. And remember this picture that I'm showing you now, because when we go back, you'll be able to see the resemblances here, which would be a sign of warning if we start to break down on those low time frames, right? That's why you break the structure down on the low time frame, and it's a real possibility that this situation could play out, because look at the scary similarities. So imagine this is 69K at the top over here. Price comes all the way down. I think it came to around like 30K. In this instance, it's $348. Big bounce. This is similar to your 48K level. Then you have a cross over here of the moving averages back up, and it comes back down. Price falls below, massive sell-off, bounces back up. You break those Lucid SARs, meaning that now you should start to pay attention, looking for potential longs. You get the cross between the 9 and the 18 EMA. That's your bullish signal telling you to go long. Now look at the timing over here. So from the point of the cross, that is 1 week, 2 weeks, 3 weeks. We push into the Gaussian channel, right? Reject. 4 weeks, 5 weeks, 6 weeks, 7 weeks. We're already back all the way down at $198. So we don't quite take out the low, but all the way back down. And then we reattempt to break through that. So meaning that this could be prolonged. Also look at this over here. So remember the numbers, 6 weeks, and then the length of the Gaussian channel, 58 bars. Okay, 58 bars. Now let's go to current price action. So there we have it. Look at this. Remember, you have the 69K all-time high, strong sell-off, bounce, you break the Lucid SAR. Over here, you don't get the cross, though, between the 9 and the 18 EMA. Comes all the way down, holds it as resistance all the way through. Massive, massive push up over here. From the moment of the cross, right, we go into those moving averages. So from the moment of the cross, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks. So if the fractal were to hold true, it would mean that you'd be looking for a breakdown quite soon. But you know, you can't, the markets rhyme. They're not exactly the same. It's not one for one parroting. It's just, it rhymes. There's similarities within the market, but you can't call it exact. Now let's look at the timing wise as well. So this one is 39 bars, right? What did I say the other one was, James? I think 58. Let's just quickly go back there. So look at the length of the red bands before we break out again. So before it turns green, 58 bars. Before we break back into it once again, that's going to be 43 bars. So 58 and 43. So this has been a pretty bad bear market, but I think 2015 definitely takes the cake. So look over here again. Currently, we are 39 bars. 58 would take you, let's just quickly measure that again. 58 bars, if it were to play out in exactly the same way, that would take you all the way to July of 2023, which means only a couple more months. That means that, yes, maybe March will be bad. March, April, May, June, July, you got, what, 5 months left. 5 months, and then, but remember, that's when this thing turns green, right? So this turns green after 5 more months. If it's the same as 2015, at that point, price has already rallied through this, which means that you're looking at the next 2 to 3 months. So again, let's go back to 2015 just to show you the picture over here. So there we go. It turns green in July if you relate it to the current price action. That means within the next 2 months, if this plays out, yes, you could have one more sell-off, but then price should start aggressively rallying out of here. And then pretty much you're already above those bands, which is going to take price action way, way above 30,000, probably 35,000 already at that point, which is why I think dollar cost averaging is a very smart move to play at the moment. There is obviously massive risk, you know, with inflation. We're almost entering into a stagflation period at the moment because inflation is becoming incredibly sticky. And it looks like the numbers are starting to tick up again, meaning that the Fed are losing control. When you have stock selling off, US dollar selling off, and inflation out of control, that's pretty much your absolute worst case scenario that you can deal with, which is why you should consider having a little bit of exposure as well to the ultimate hedge, which they call gold. Of course, I'm not saying all in gold, but don't go 100% into crypto necessarily, because if that does play out, then you could be in some serious trouble. So that's what we're looking at over there. Now, moving on, the volatility is low. You know, we've been following the volatility and the liquidity for a couple of days. So from 𝗕𝗬𝗕𝗬𝗿 here, he says, quite the chart from 𝗥𝗢𝗟𝗫. Order book depth in the crypto market is hitting new lows. It's hitting even lower levels than we're seen post FTX collapse. Watch out for illiquidity to both the downside and the upside. So I'm glad that he's able to acknowledge and recognize that, right? The low liquidity and low volatility means that when the expansion comes, so new liquidity injection into the market creates an expansion of volatility, so new volume comes in, then it could lead to an upside or a downside move. And I think that that is absolutely staggering. If you look at that FTX collapse over here, there goes all the liquidity and volatility straight down. Well, volatility went up on the sell-off, but liquidity went down. And then right after FTX, no one wanted to trade, right? Everyone was sitting on their hands, waiting to see what's happening. We're going to 10 to 12K, including myself, waiting and just sideline. And then volatility contracted, and look at where we're at now. So very, very clear levels over here that there's a lack of interest within the markets. And Avi, who's a great trader as well, this is the guy that always hacks all these different protocols and stuff. Very smart trader. He goes and exploits different protocols. He's most known for that Mango Markets, that he exploited that and siphons out huge amounts of money by basically calling their BS on their protocol. He says, I'm getting very constructive on ETH volume. So 90-day volume is at 58, which is 58 is too low. 3% daily moves. and then likely a product of structural selling. So he says it's vaults, overwriting funds, and a lack of structural buys. Retail is absent, and then there's few active funds right now within the market. This covers Shanghai, which should become a volatile event, meaning that, we don't know, is it going to be up or down? There is still a possibility that Ethereum goes all the way down to about $700. I can't remember the number exact, but it's in that 700 region, is a key yearly level, key quarterly level that remained untagged. So volatility goes to the downside. Possibly you're going to go down to those prices. It goes to the upside. Then, of course, the bull market is essentially going to be in full force once again. The price is going to be taking off across the board. So do keep an eye on that and plan accordingly over the next couple of weeks leading into these events. Here's the Bitcoin volatility index chart, which I showed you from CoinGlass. If you want this, you need to go to charts, click on charts over there. They have a lot of different useful resources that you can utilize, and it is totally free. So volatility is very, very low. That is measured by those green bands. We covered this extensively yesterday, meaning that something big should be coming soon. The Pi cycle, I haven't used this for quite some time. Pi cycle bottom indicator. You also get a Pi cycle top indicator, which has been relatively accurate. It never pinpoints the exact bottom. Sometimes you go a little bit lower afterwards. So let's look at 2015, what happened over here. Ultimately, what it's doing is it's looking at the 471 and the 111 moving average. Once you get a bearish cross with that, usually that signifies that price is quite extended past that, and then it fires its signal. So that marked the bottom over there. Yes, price went low, but what I want you to focus on is timing-wise, right? Timing-wise, it was relatively close to the bottom. It created that whole accumulation zone in 2015, and then prices went up towards the upside over there. Let's look at this one over here. So there you have it. On the 3rd of December, 2018, this one pretty much nailed it, both time and price-wise. That's the level that you saw. This one over here, Black Swan event, obviously you can't include that. It's not part of the usual Bitcoin cycles. And then you have this one over here. So, of course, if you line this up as well, and I've shown you this many times before, everything on-chain, from an on-chain metric standpoint, was indicating that time-wise, June, July should have been the bottom for the market. FTX came over here. So price was doing that accumulation thing going sideways. FTX came, boom, that's that candle straight to the bottom. Now we know that we're looking at that as a range, right? So let's quickly draw it in. We know that more or less, let's make that nice and big for you. More or less, we are viewing that as a range, with this being the deviation below the range. And then we reclaim the range over there. Once we reclaim the range, then we're looking towards the next part of the range, which is over here, which we're still yet to break out of. So that part of the range, once we break out of that part of the range, yes, you might have another deviation and then just come back into the range. Or what's going to happen is you're going to hold over there, and then it's going to be mega bullish. Then people are going to just say, oh, no, that was the deviation, big deviation, right? And this was the main range. And now you're back in that main range. So pay attention to that. That's kind of where we're at now. The longer that you hold sideways and press against that resistance, the more likely it is that eventually you're going to break on towards the upside. So I like to use that 2018 as a comparison, because in the same way that everybody saw this as support, let's just put in, we now have the inverse of this, right? So the way that you saw this as support, everyone said this is the bottom at 6,100. Grind against support, bounce, 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 grind, 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 breakthrough. Now you have the inverse of that, right? So if current price action is grinding up against that resistance zone, so here we go. The more times that we keep testing this, push up into that. Yes, we had the deviation, push up, push up. The more times that we just see that, the more likely it is that you're going to have an explosive move to the upside. So I stand by that. I understand the risk to the downside, which is why I'm controlling everything through dollar cost averaging to spread my risk. Instead of entering more money into the market in one big bang, which is what I would usually do if I got my trading system signaling a buy signal and telling me that I should be going long, which is a swing trading system, by the way. So looking for momentum trades over weeks to months. Usually I would go all in one shot. Instead, I understand obviously the inflationary risks I understand the stock market risk at the moment, which we'll go into now. It's dropped below its 200-day moving average, so not a good sign. And therefore, I'm spreading that risk by dividing my portfolio up and dollar cost averaging over a couple of months. So be careful with your trading, guys. All right. TED Talks Macro says recently Bitcoin has become more attentive to what is happening in Asia than what has been going on in the US. Massive divergence over here. You can see there, Bitcoin is the black line. So historically, it's followed exactly with the US. We have US tech stocks, which we're most correlated to, that being the pink line. Big sell-off on that. Look at how it came down. And then you have the Chinese stocks, which have been going up, and Bitcoin's been tracking with that. So the question is, how long will that remain? And which one will give first? Because one of them need to catch up. Well, either the Chinese stocks and Bitcoin are going to catch up with the US markets and come back down, or the US markets are going to catch up with both Bitcoin and the Chinese stocks. So here he gave an update this morning, 5 hours ago. Hong Kong's Hang Seng index gaps down on the open. Bitcoin is following. This is likely owed to profit taking after a huge day yesterday, bounced shortly. And then for Bitcoin to follow. So that's looking at the Hang Seng. We're looking at this chart over here. It's still looking strong. This is the SSE Composite Index, which is basically an index for all the Chinese, well, they call it the Chinese stock market, essentially. We're looking at this horizontal region as a zone that we want to see reclaimed. So far, we've bounced off the multi-decade trend line that's been holding all the way back since the year 2005. Bounced very, very strongly off of that zone, reclaimed above the 200-day moving average, the 200-week moving average. And now you're looking for this box to hold. If you can see this hold, it's going to play out over a couple of weeks. So it's not all going to happen today. But over the next couple of weeks, so leading into April, if you can see it holding above this box, I would say that would be pretty bullish. And you can draw your trend line and you'll be looking for higher prices there. And if Bitcoin remains correlated to the Asian markets and continues to follow that trend, then we have a good series of events on our hands. So Clark says, very odd movements this late. He meant last night. And he says, what do the markets know? The dollar's ripping and indices are dumping. And here you have the dollar. Let's look at the levels quickly. So almost reaching target one. Target one I've marked off at 105.6. It may go a little bit higher because that lines up with the 0.382 fib retracement level, as well as the 200-day moving average, which is the yellow one over here. So what I would like to see is, if not that this needs to happen, but if you can see a big push up into that zone and then you can deviate back below and then the dollar can start to come back down, that would be good for risk on assets. Otherwise, if the dollar does make it all the way up to 110, that's the worst case scenario. Then I would imagine that crypto and equities are going to suffer in that environment. But ultimately, we would still be viewing this region as a major lower high zone in comparison to what was set previously back in the end of September at 114. So watching that over there, here you have the ES1, which is the stock market futures, S&P 500 futures. It has now come into that zone. So this is really do or die. It's do or die for the stock market over here. If the stock market is able to do, then it should bounce off this region. So coming directly into the mid-range, into that diagonal, which is basically the lower highs. So coming in to retest that zone as support. If it loses that level, then pretty much, obviously, we're going to go much lower. You're potentially looking at 38.80 as maybe your last line where you could potentially bounce. So sharp sell-off and reclaim. If you see this, sharp sell-off and reclaim above, that would be pretty bullish then. Then you can say that was the shakeout. So I marked it off 38.82. That would be the shakeout level. But if you start to come down below you and you're holding underneath those levels and you break under there properly, then pretty much all those major lower targets come onto the table again, those being the range lows. And I'd imagine this will all line up with when the inflation results come out, which is all in March in a couple of weeks' time. I think we have 2 more weeks. So expect a lot of chop leading into that, and the ultimate decision will be made around there. Upside zones, liquidity is the next level, which is just below the 0.75 at 40.50, looking for a sweep of that liquidity within the markets. Now, I've been taking other trades over here on PrimeXBT. I took a gold trade. I see it's busy coming down now. I have my stops raised. but I entered on this candle over here, not at the bottom of the candle, but somewhere within there at I think about 1850. I'm still up about, I was up 45%. I think I'm up like 35% now. Areas of interest, if you followed along with the gold trade on PrimeXBT, you're looking at number one, the 0.382 fib retracement level, which is 1863. That's for gold. If you get above that level, then we're looking at 1900 as the next take profit zone. It is possible that you're just within a range and you might make it all the way back to the top, but I'll be okay with the profits at that point. I'm like 200% up. So I think I will just take my profits while they're on the table. If you do want to trade other stocks or indices or commodities, PrimeXBT has a link in the description below over here, and you get a sign-up bonus, but you must type in the promo code. You need to go to the promo code section over here and then type in Kyledoops for both margin USDT as well as BTC. Okay, moving on. Global liquidity. So again, focusing on global liquidity, I found this quite interesting. I need to verify this chart. I only found it this morning. I haven't had time to go look into it. But if any of you know, maybe let me know in the comments, have you seen this chart before? And does it make sense to you? Is it legitimate? Because this is from Kush over here. He's verified. So let's see how many followers he's got. Just under 10K. So hopefully he's giving accurate info here. But he says global liquidity. Today we see one of the largest one-day injections of global liquidity, on par with some of the biggest weeks seen in 6 months. Oh yeah, and if you can't tell, there's more liquidity in the system today than when BTC and SPY were at previous all-time highs. 𝗬𝗍𝗃𝗃, he says. So let's just quickly look at that over here. So he has the liquidity. He's calling this global liquidity. Remember, where was the market top? So here's where we are now. The market top was over here. So 2022, it was in November 2021, which was around about there. So if I move my cursor over, he's saying that that is where the liquidity was at about 74. And now we're at about 77.43. Now, let me know in the comments, is this a good thing or a bad thing? I think this is quite a scary thing. If this was the global liquidity and the stock markets have sold off, and they really put the hammer down on quantitative tightening, and they start to remove more money out of the system, where does that money go? Well, most of the time they're buying up the government bonds, which is why you're getting such a massive return on them at the moment. I think you're getting around 5 or 6% on treasury bills, which is huge, right? If you're a fund, that's guaranteed money. Where are you going to put it? Of course, you're going to go there. It's simple, easy. So if that continues to contract down and Bitcoin's already at these levels, the stock market's at these levels, then can you see that 10 to 12K Bitcoin? Well, it's very possible. So we really need to wrap our head around the liquidity properly. But I thought TED Talks had a good series of indicators over here, and they show that at least the only one that was going up was the People's Bank of China, which is this one. And you can see the last couple of days it has been ticking back down again. So if you are wanting to time little pumps on quick trades, watch this indicator over here. If you see this start to tick back up, that would be your indication that maybe it's time to establish some positions. And in line with what I just said, the liquidity, if it is going up still or it's moving into other industries, it's going into these government bonds, right? So look at the yield curves over here on 2-year coming into our target zone. Now we need to see, is there going to be a reaction from this, or is it just going to blast straight through? So 2-year has met the target. The 10-year is still strong on its way up. I showed you the W formation pattern over here. This is a very bullish pattern, which means that it has a measured move all the way up to the previous highs at 4.2%. This can create some damage within crypto, but 5% up more on the 10-year yield could also provide buying opportunities for the longer term. Because look, we've looked at a lot of things, right? We looked at the timing cycles. We looked at the pi cycle bottom indicator. Everything lines up that basically maybe you're not going to nail the exact bottom price-wise, but if you say to yourself, hey, the bottom is most likely going to be in over the next 6 months, then these are good things, right? So if you see the 10-year yield coming up, that provides opportunities for you to get in. Rising yields are usually bad for risk on assets. And then the big one is the 30-year yield over here. This could have a massive move up still because same thing, W formation pattern, looking for big spike up. All right. there is our rising channel chart over here, which we did acknowledge. We said yesterday, these have a high probability of breaking down. The question is when. As long as these levels get defended, so the previous wick lows at 22,769 is the level that I have. So let's just zoom in over there. So these wicks over here, 22,780. Let's give you the exact level. I'm going to read it to you on the low there. So 22,770 is the wick low from the daily. As long as you don't see any closes underneath that, it's already showing that it's giving signs that it might start to break down. So bulls will need to take control very, very quickly. If bulls want this to hold up, they need to push price up soon. And then we were looking at the mid-level of that range, so 26,320. And then potentially max scenario would be 29,429. That would be a huge profit-taking zone. Imagine if you were to get there in the next couple of days, or what would that look like? Imagine a 25% pump for Bitcoin by the 10th of March, timing-wise. That's what it would look like. That would be huge. That would be huge. I would 100% be selling pretty much everything into that zone. Big underside resistance, top of the channel, leading into the inflation data. It would be a perfect trade. But let's see. All right. Over here, you have the 50 MA, which is an important one, the red one. Let's see if that can hold the support. We're getting ever closer to touching it. Even if price just continues to go sideways over here, this MA is continuously rising up on the daily chart, which means it's going to meet up with price action. And then we can see, is it going to test that level? For the investors in the room, if you're an investor in the room, let me know in the comments. Are you an investor? Type in the box over there, are you an investor or a trader? If you're an investor, you are using your final line in the sand should be the 200 moving average. That has been a great indication in the past. If price does come down, you can continue, in my opinion, your DCAs as long as price is above here. If you start to lose this, it becomes a dangerous situation, right? Because that means that you're now deviating back below, which we've never seen before. Usually we go below and we quickly reclaim the 200-day moving average. You'd be deviating below that 200-day moving average and holding underneath it. I stand corrected, by the way. I mean the 200-week moving average, but still use the 200 daily as a proxy. So what I meant to say is that you've never held below the 200-week moving average without reclaiming it quickly. And losing the 200-day moving average over here would mean you're also going to go back below the 200-week moving average. Well, we're already below it, but you're going to reject hard off of that level. So that's what I'm watching over there. We have the range over here. Nothing has changed based off of yesterday. Still the same place. The only thing that I've noticed, which I don't really like, is that the EMAs, which is the 50 and the 200 over here, the red one is the 50 and the blue one is the 200. They're running sideways over here. So what that means is if price doesn't start to rally soon, then these EMAs going sideways, excuse me, I can't talk. Sideways means that price is going to break down that trend line. And then once you break down that trend line, your target actually should be the mid-range, which is going to be that area at 21,600. And then you can reevaluate. So that's what I'm watching. Low time frames, not much has changed. Let's see on the even lower if we have lower time frame over here. This one, yes, I did want to mention something. Go on the 1 hour. So I forgot to mention this yesterday. I had these drawn out, so you can go and look if you don't believe me. But the shorts will be invalidated above 24,025. A lot of the shorts are basing their basically their invalidation zone around this level, those wicks over there. And you can see the way price came into that, right? Wicked almost directly into it, came back down. You have a resistance level, which is tracking across over here. And every time we came into it, right? So 1, 2, reject. So if you reclaim that, you'll be breaking that resistance line and you'll be taking out the stops over here, which means that prices are probably going to be going higher. Ultimately, they're going to be shorting all the way down to that mid-range, which I said was that 21.6. So price-wise or percentage-wise, they're looking at around another 8% move, 21.6. Around another 7-8% move. Ask yourself on altcoins, what would that look like, right? Probably going to be about 20%. Okay, not much to say on that one. Last but not least, I wanted to mention this as well. this is what I was looking for in yesterday's show. Stay far away from these tokens for the safety of your wallet. The reason why he says this is this is the top 7 upcoming token unlocks, which are happening in March. So I told you, just consider rebalancing your portfolio if you are holding these. 1st of March, so 𝗕𝗲𝗃, that's today. 17th of March is 𝗕𝗍𝗃𝗍. BitDAO on the 15th. He's got these out of order. He should be putting 15th before 17th. Aptos on the 12th. DYDX is on the 14th. 𝗍𝗶𝗍𝗽𝗍 is on the 25th. And then 𝗥𝗢𝗟𝗘𝗫, that was, so those 𝗥𝗢𝗟𝗃 and 𝗕𝗃𝗃 would have been yesterday already. So you probably already missed the boat on that one, but check for the other ones if you are in those positions. All right, guys, that's it from me. Give the video a like, hit the bell notification, and subscribe. And one more thing, Rand was sick once again, which means that you still have another day for the Rolexes. So we do have the Submariner blue and gold, as well as the Submariner black. The black one is with BitGet. The blue and gold is with Bybit. Use the links in the description below. You get to claim your sign-up bonus as well, which is between 8,000 and 30,100 or 30,030, depending on which exchange you choose, and that will get you into the competition. Another thing is, where did this go? How do I get that? There we go. Got it. So the Discord over here. If you're not in the Discord, get in the Discord. We're constantly updating you as well with regards to price action within the markets. So there you have your most recent update. This is exactly what I just showed you on the low time frame chart, right? Trend line over there. And you're looking at rejection. So playing it back down to the bottom of the range. These are all trade opportunities within the range. You can go long here to the top, short down to the bottom, and the trades are dropped in there. But you need to use one of the links in the description below to get access to that. That's it. I'll see you all on tomorrow's show. Tomorrow will be a quick one. I am going to be flying soon after that show. So see you all tomorrow and have a fantastic day. Cheers for now.